Question is, should investors trust Powell and company's next move and trust that it won't gyrate the markets? Let's bring in former Fed Vice Chair Randall Kroszner, joining me now live along with trader Scott Fullman. Randall, I'm going to begin this conversation with you. Powell did not commit to timing on the first rate increase this year, but it's pretty obvious that right now all Fed meetings are live. In other words, could happen during any one of them. Did you hear him say anything that indicated March will be the first hike?
He was really trying to be clear about not committing to a particular date when they're going to move. But certainly there have been enough of his colleagues who've said March is the time to move. And given that inflation is so high, I think there's a very high probability they will start the rate increases in March.
Okay, and I don't want to freak out anybody. We do have a meeting January 25th and 6th, so no chance of anything happening there.
I think it's highly unlikely. I think if he wanted to do that, he would have telegraphed that. One of the things that I think Jay Powell has been very good at is sort of making sure the markets aren't shocked by anything that they do. Remember, it was about a decade ago where we had the so-called taper tantrum when they started reducing the rate of purchases. Powell did that without really causing any tumult in the market. So I think he's gotten the communication down pretty well.
Okay, so do we have to go in order here? Meaning, must the tapering or scaling back of the stimulative bond purchases be finished before the Fed starts drawing down what is now this bloated $9 billion balance sheet?
So there's no formal reason why that has to happen, but I think that's the way that they're thinking about it. I think they've speeded up the taper so that they're going to be basically stopping their asset purchases by March, which would allow them to start to raise rates in March. So they'd finish the additional asset purchases and then start to do the raising of rates. People thought that wasn't going to happen until the middle of the year, but now I think it's very likely that it'll be in March.
And the markets do not seem to be scared by that. For those of us who are in cars right now listening on XM Channel 113, Dow is now up 173. The Russell's having a great day, up 1 full percentage point. We've got the NASDAQ up 1 1/3%. But this leads to this question. How aggressive, Randy, will the Fed be? And is there a correlation between unwinding the balance sheet and the number of interest rate increases this year? Meaning, could you say that each, say, for example, $250 billion chunk of balance sheet reduction is worth one rate increase?
Well, people have estimates that are all over the boards on that. I think what they're going to try to do is sort of stop increasing the size of the balance sheet, that's the taper, and then start raising rates. They might slowly unwind the balance sheet also, but I think they're going to be more pivoting to the rate increases. But if inflation persists, and I think it's very likely to persist, and Jay, I think, made it pretty clear that, well, we're not so sure, but we think there's a pretty high probability of that, that they may do both as the year goes on. And obviously, there's some chance that there could be some tumult in the markets.
We're sure. Just so you know, Randy, and you've watched our show before, you've been on it, we have been very clear that we felt, and of course, it's easy to say that I could be in the Fed's shoes. I'm nowhere near his experience, but we could tell here on the Claimant Countdown that inflation was going to be persistent. I mean, today, Powell did admit that. Back in May, after 6 months of rising prices, he was off the mark when he predicted inflation would be temporary. Here's the excuse he gave to senators who asked him about that, and then you can react to that.
We said that because we thought that these supply side bottlenecks and shortages would be alleviated much more quickly than they have been. There's no empirical experience with this before. We haven't had the global supply chain collapse. So I think we learned that. It wasn't that, it was just, this is a unique set of circumstances.
And of course it was. But how long do you believe inflation is going to hang around?
I think it's going to be around for a while. I think we're going to see continued supply chain challenges. I mean, as you know, China has a zero COVID policy. The Omicron variant spreads very rapidly. They've shut down Xi'an. They're shutting down other cities. So I think you're going to see a lot of supply disruption over the next few months from China. And then that has lasting impacts through at least the first half of the year, and I think probably even into later in the year.
Former Fed Governor Randall Kroszner, great to have you, sir. Thank you very much. You guys have saw Scott Fullman. He's our trader right now for the Floor Show. Trader, Scott, you've got to give me a sense. Is it time now to hunt down stocks, specifically where management and insiders are buying, because that may very well be the only indication, aside from the fact that people have gut feelings about certain stocks and about the demand for their products, when you're trying to pick up some winners here?
Well, I think that definitely the market is getting much more selective, and stock selection is becoming ever more important as we move forward. And that happens as we move towards the end of an economic cycle, or when the Fed does come in and start to tighten their policies. The fact is that trying to identify some of those securities now is a little bit challenging for people, but look, we're finding them, and there's been good securities that have gotten beaten up over the past couple of weeks that are now, the prices have come down, and now it's like buying them on sale. And I think that there's plenty of good ideas out there. I mean, I personally, I like AMD. I like AMD. I own it myself. I think it's a good company to own. They're making tremendous headway. They've taken market share from Intel. And the fact is that I believe as we turn around and the economy starts to come back, there's going to be more demand, more need for chips, and more need for computers. And again, this is a great way to play it. Also, the companies that actually make the equipment and supplies for making chips, companies like KLAC and Applied Materials. These are good companies that you want to be looking at now, because there's going to be demand still going forward. And as the economy bounces back and continues to expand, we're going to need more chips. And remember, we're seeing technology continue to expand, especially as we start to move more into electronic vehicles and the next generation of just, computers and communications.
Well, all I could tell you is whatever Powell said did not frighten the markets. They're embracing it, folks. We are at session highs. Right now, the S&P is up 40. I want to just let you know, 2 minutes before the show, what I always say to my producers is, what are the highs and lows? 2 minutes before the show, the high on the Dow was up 179. Right now, we're up 193. Just a second ago, we were up 202 points. So climbing in this final hour of trade.